I think what's important is both the nature of the returns and the nature of the risks. So what investors want is essentially a set of returns which is pretty predictable. They don't want a lot of hidden liabilities, so they would worry about decommissioning of energy systems, for example. At the same time, they want consistency in terms of the regulatory regime. If they are promised that prices will go up by inflation plus 2%, they don't want to take the risk that suddenly governments or policymakers change those. So those are really what is key. We want a clear pipeline of projects, and we want a clear procurement process around that. Those are what are going to attract the most money.
The institutional investors are critical for the economies of the EBRD region, both in North Africa and in Eastern Europe, because they are the ones who are providing the long-term investment. Secondly, they have the ability to provide long-term debt investment and long-term equity investment. The only problem is that the institutional investor market domestically is still very underdeveloped, just because they're young. Young insurance, young pension funds, young asset management companies, whilst international investors, of course, have got a lot more capacity, sovereign wealth funds, pension funds. And so we're working hard in various dimensions to support the growth of domestic institutional investors and to find ways of bringing the international institutional investors into the EBRD region. They're critical in terms of enabling the economies to grow, particularly now that the banking system is finding it more difficult to do long-term lending, finding it more difficult to do cross-border banking. And so there are real gaps appearing in the supply of long-term credit. And because of the underdeveloped nature of the equity markets, there's also a lack of equity finance. And so these are two key sectors that the bank is focused on. The first one, the domestic institutional investor market, we're focusing on via our local currency and capital market development initiative, supporting local pension industry, supporting insurance companies, supporting the development of equity markets through supporting stock exchanges, supporting the issuance of domestic corporate debt. These are dimensions that we think are, of course, in some countries easier than others. We've seen huge progress in Poland and in Russia and Turkey. But of course, there's smaller countries where it's equally important, where it's more difficult. And we're working with the institutional investor base, which has enormous capacity, the sovereign wealth funds, the pension funds in Europe, North America, who have very little exposure to our region, just because of the underdeveloped nature of the capital market and the fragmented nature of our countries. And so we're looking at seeing whether or not the EBRD can act as a vehicle through which they can access these markets, and that's being done through our institutional investment partnership. And this hopefully will be a way through which we can begin to introduce some of these large institutional investors from Asia, Europe, North America, Middle East to the EBRD region. I think that will be an enormous catalyst for long-term capital flows into our region.